Welcome everybody to the Physics of Investing. My name's Caleb, and today we're going to talk about exactly how I made nearly $1,200 with options contracts. We're also going to go over our weekly review of the Investing Together account, and then we're going to go over what to expect in the coming weeks and months for the overall market. So how I made nearly $1,200 with options contracts. I'm going to give a quick explanation of what a call option is because that's what I use. So a call option is an option contract giving the owner, which is the buyer, the right but not the obligation to buy a specified amount of an underlying security at a specified price within a specified time. I'm going to give you an example in a second, but what you need to understand is call options are bullish, meaning if the underlying stock goes up, then the option price goes up, which means we make money. So example, if I buy a call option contract on Tesla with a preset price of $500 that expires in 1 year, this means I have the right to buy Tesla shares for $500 anytime from now until 1 year away. So there's two scenarios that can happen with this. Tesla stock can be above $500 at the end of 1 year, or Tesla stock can be below $500 at the end of this year. So let's imagine Tesla stock is below $500 at expiration. This means I had already purchased the right to buy Tesla shares for $500. Now, if Tesla stock is below $500, why would I want the right to buy Tesla stock for $500? I can already get it for cheaper because it's below. So in that scenario, the call option expires worthless, and that means it's worth $0 at expiration, which is part of the reason why options contracts can be very, very dangerous. Now, the second scenario, Tesla stock is above $500. I purchased the right to buy Tesla shares for $500, remember? So if Tesla stock's at 600, 700, or even 1,000, I can still purchase them for $500 a share, which means that for every dollar above 500, that means I'm making money. Because if it's trading at $700, I can buy it for $500. So I'm making $200 per share for every share, which is a kind of an example of how powerful options contracts can really be. So just a couple of things on terminology. The strike price, that is the preset price that's agreed upon. So for us, it'd be the $500. The date the options contract expires is called the expiration. And one option contract controls 100 shares of stock. So in that example, with the $500 strike price of Tesla shares, I was able to control 100 shares of stock for every options contract. So basically, at the most basic level, the main thing you need to understand is option contracts are a way to leverage your money, right? You can make more money with less in a very short amount of time, but you can also lose a lot of money in a very quick amount of time. You're just controlling more with less. That's the main thing you need to understand. So there's three main things that affect an options price. Okay, that's the price of the underlying, time decay, and then implied volatility. So the price of the underlying, like we said, a call option is bullish. So if the stock price moves up, our options price moves up. If the stock price moves down, our options price moves down. There's nothing really more to it. Now, time decay is where things get a little tricky. So this is kind of where options and stock start to diverge. So options get worth less more and more every day. So when I buy my call option, when I buy my call option on Tesla, as those days get closer and closer to 1 year, the option price is getting less and less. This is because there's less time for Tesla stock to move above $500 and become in the money. So that's an example of time decay. You want to be careful of time decay because it's exponential, right? So as time moves on, time decay gets stronger and stronger. So time decay a year out. So my option contract, immediately as I buy it and it expires in 1 year, time decay is not that strong. But as time goes on and we get a week away from that expiration, time decay is very, very strong. So each day you're losing a lot more than you were a year ago. And that's also another important factor to consider when you're buying options contracts. Lastly, implied volatility. So this is best described through an example. So imagine Tesla's earnings are coming up, right? And half investors think they're going to blow their earnings out of the water, and then the other half think the earnings are going to get crushed and they're going to lose a ton of money. This is going to be an example of high implied volatility, which is going to make buying options more expensive. It's going to push the price of those options up because investors are expecting a big move, so they all want to leverage their money, and they're just going to bid the price of those options up and up and up, and it's going to make them more and more expensive. So, like I said, it's because everyone's expecting a big move, everyone wants to leverage their money, and everyone's bidding up those prices. So how should you use options, and basically how do I use options? So you should always buy options with long-term expectations and long-term expirations of at least 1 year. So this is because we're long-term investors. Long-term investing is proven to work time and time again. It works extraordinarily well. The other reason to consider is, like I said earlier, time decay. Time decay gets really powerful when you get closer to expiration and it's very weak far out. And also, as you get closer to expiration, options are really volatile. They get more and more volatile. So a 2% move in a stock that has an option contract that expires in a week, that option contract might jump 15% if the stock price only jumps 2%. Whereas that jump might not be, or definitely won't be as big as a contract that expires 1 year out. It's still going to be bigger than the stock price jump because, like I said, options contracts are leveraged, but it's not going to be as big as that option contract that expires in 2 weeks. And that's why you got to be really careful. And I'd say just avoid short-term options because of how dangerous they can be. So next up, normally I use options only if I know there's just an extraordinary opportunity. If I see a stock that's just way too cheap, I know their business, like I just need to jump on it today. That's a great time. That's a great time to use options because if you're so confident that you're willing to leverage your money and it's an extraordinary opportunity, you just need to jump on it, and it kind of avoids you from taking speculative risks all the time because extraordinary opportunities, like you see it when it happens, right? So it's okay to do it every once in a while. You should only buy options on stocks you know. This is probably the biggest one. You got to view options as they're just another investment tool. They're just like stock, right? Like I said, if you're going to invest in a stock, you need to read their 10K, 10Q, you need to listen to their conference call, you need to watch CEO interviews, you know all about the company, the balance sheet, the net income, the revenues. Just like that with stocks, you need to do the same thing for options. That's going to keep you away from getting into speculative, oh, I heard a rumor about earnings, they're going to blow it out of the water. That kind of avoids that, where you can lose a lot of money very quickly because you're not being careful and you're not doing your research. So my example, what did I do to make this amount of money in such a short time with Nordstrom? Well, I made nearly $1,200. And the first thing that I want to point out to you guys is I know this company. Like I've been following it for months. I've read their 10K, their 10Q, listened to their conference calls, watched CEO interviews. Like I know this company. And I watched it drop all the way to under $12, which was below its initial crash in March. So the initial crash in March was max fear. I mean, it doesn't get any scarier than that. Like people thought the world was gonna end. And then now I'm seeing the stock price drop like below that. Like that just didn't make any sense. And I looked at I've seen their last quarter earnings. The business had to be closed it was closed for more than 50% of the days in their last quarter. So for me, I know for a fact that's the bottom. It doesn't get any lower than that, being closed for 50% of the days. And they're still the cheapest they've ever been. So the stock was at $11.90, and I went ahead and I bought an option contract for April 2021. Now this is 6 months out, and I bought it for a $12 strike price, so kind of at the money. I didn't add this in earlier, but another thing of successful options investing is you should always buy them at the money. When you buy an option out of the money, like I said, if in the Tesla example, if the stock price is below $500, it expires worthless. So you kind of want something, when I say at the money, I mean, you want a strike price that kind of matches the stock price, right? So if Nordstrom's trading at $12, then I kind of want an options contract at $12. Just because we know that the option contract can expire worthless if you're not above that strike price, right? Okay, so now we got that out of the way. So I watched the stock. I watched it go all the way down to $11.90. I bought my first option, right? So now I'm holding and I'm chilling. Now the stock goes up and it bounces, it rebounds off that $11-ish. And then it comes right back down. and I saw another opportunity. I was like, okay, I'm going to go in now again because I've seen it. It's just too cheap right now. So then I bought some more options calls that expired in January. Now this was a mistake. I should have bought options contracts that either expired in April or farther out. January, it's too short, and it was a bad idea. And it kind of, when you do something like that, it makes you focus on the short term, which is just not profitable, and it doesn't work out as well. And that was a mistake on my part. I should have bought them 6 months or a year out or longer. That was bad on my part. Now I plan on holding these options for at least the next couple of months. They have earnings coming up, and I think this wasn't as much of an earnings play as it was a value play, but I do think that they were going to be earnings. So the plan was to hold it for a couple of months. But all of a sudden the stock just bounces. It just rebounds, and it goes higher and higher all the way up to like $14. Now I was up about 60% on those calls. So there was a couple things to consider. I planned on holding these for the next few months, right? I had made 60% of my investment. I bought in because it was ridiculously cheap, which it still is, but it had recovered a decent bit. And you guys know, with the election coming up and the Rona cases going crazy and everything that's kind of going on right now, there could be a lot of volatility in the future. So I went ahead and I took some profits. Now I don't day trade or swing trade or anything like that, but I saw an extraordinary opportunity and I took it. And it paid off. I would still be confident holding them today because I still think the stock's super cheap. But I just saw that there was some profits I could take because I knew there's volatility coming in the future. So I might as well just build up that cash position. And a big thing to recognize is, like I said, like I know the company. I know their previous earnings power. I know about them having to close half their stores in Q2. I know they're not going to go bankrupt from looking at their balance sheet and listening to their conference call. Like, I knew how cheap the stock was. So it was a good idea to get in. Getting out, on the other hand, I could have held it, but a 60% return that quickly, I think it was justified in making the move, just because A, I didn't have a ton of cash, and then B, all the volatility we got coming up with the election and the cases and just kind of in general in the market. So now we're going to switch away from the options and we're going to start talking about the Investing Together account. For those of you who don't know, this is an account where I track every move on YouTube. We're going to go over it really quickly. So as you can see here, I made a couple moves in this account since the last video. I bought another share of Facebook today, as well as adding some Nordstrom. I held off last week to make any purchases, and nothing really too crazy happened. And Facebook's valuation is still attractive to me, so I went ahead and bought another share. And as I mentioned with Nordstrom, I still think the stock is very attractive, so I added some more. And as of the screenshot, we're up about $18, and I still have $100 in cash, which is 10%, which is in the range of 10 to 30%, which is exactly what we want. So we're 1 week closer to the addition of cash, which is really important, so we're safe in that respect. And then the plan is to just continue building both of these positions, documenting it all along the way. So lastly, we're going to go over the current state of the market in general. This is an important topic that I think we should go over. There's three main things we got going on. We're still waiting on stimulus. We haven't gotten that. The election's right around the corner. There could be a lot of drama, maybe a major upset. And then Corona cases are going crazy. So there's a lot of things that could affect the market in a big way. But no, I'm not selling out of my positions. I don't plan on it. Don't plan on it. The best thing you could do right now, and the best thing I'm doing, is keeping 10 to 30% cash, being ready for buying opportunities, and just kind of hanging out and waiting and seeing what happens. That's really all you can do. And being a long-term investor, we know stocks always go up. So timing the market is just too difficult, and it doesn't work as well, especially if you're trying to sell out of your entire portfolio. I wouldn't recommend it. So that concludes today's episode. I hope you guys liked the video. If you liked it, please give it a like and subscribe to the channel. I hope everybody that's watching this has a great day. I hope you guys and your families are being safe.